Welcome to The Explainer. Today, we're digging into two absolutely massive questions that could really define the next big move in the markets. Okay, let's get right into it.
Now, at first glance, these might seem like separate issues, right? But they're not. They are deeply, deeply connected. We're going to explore exactly how a move by the Fed could light a fire under small cap stocks, and what that, in turn, could mean for Bitcoin. Understanding this chain reaction is going to be key.
All right, so here's our game plan. We're going to start with the Fed, the big picture. Then we'll zoom in on that critical $30 billion number everyone's talking about. From there, we'll look at the Russell 2000 and wrap it all up with how this could impact Bitcoin. So, first up, the Fed. Why is everyone suddenly whispering about more stimulus? Well, it all comes down to the health of the U.S. monetary system, which is, starting to show some cracks. Think about it. After the absolute fire hose of cash that got pumped into the system post-COVID, the market got used to it. Now that the Fed has started to pull some of that money back, even a little bit, it's causing some real tension. And that has a lot of people thinking the Fed's going to have to step back in and turn the taps on again. Now, they probably won't call it quantitative easing, for political reasons. They'll give it some other boring name. But let's be real, the effect is exactly the same. More money sloshing around the financial system. So the real question isn't if they'll do it, but how much. And that brings us to the magic number. Market analysts have basically zeroed in on this one specific figure that's going to tell us if the Fed's action is a real game changer or if it's just, routine maintenance.
And there it is, $30 billion a month. This number has become this huge psychological line in the sand for the markets. It's the threshold that separates, okay, they're just keeping things stable, from, whoa, they're hitting the accelerator. So here's the deal. If the number comes in below $30 billion a month, the market will probably just shrug. It's seen as just enough to keep the engine from stalling. But if it comes in above $30 billion, that's seen as pure rocket fuel for risk assets like stocks, gold, and especially Bitcoin. So everyone is watching this number like a hawk. And it's not just how much they spend, but what they buy. Buying longer-term bonds is way more potent than buying short-term T-bills. Right now, the consensus is they'll probably stick to bills, but hey, an injection of $30 billion, even in bills, would still be a really bullish signal. Okay, let's shift gears and see how this liquidity could light up one part of the market in particular. Okay, so now we're looking at the Russell 2000. This is the index of small cap companies, and it is sitting at a fascinating spot right now, just tapping on the ceiling of its all-time highs. It's right on the edge. And here's where it gets really interesting. Even as the index is this close to a major breakout, a ton of traders are betting against it. I mean, short positions are at historically high levels. You've got this incredible tension building, like a coiled spring just waiting to pop. And if that spring does pop, you get what's called a short squeeze. So if the index breaks out to new highs, all those people betting against it suddenly start losing a lot of money. They have to scramble to buy shares to close out their bad bets, and all that forced buying just pushes the price up even higher, even faster. It's a vicious feedback loop that can create absolutely explosive moves. So where does Bitcoin fit into all this? Well, historically, when you see the Russell 2000 rally, it means traders have a big appetite for risk. It's risk-on time. And Bitcoin tends to do very, very well in that kind of environment. But of course, Bitcoin plays by its own, let's just say, chaotic set of rules. And this really gets to the heart of it. Just look at the wild swings we saw over the weekend. The price rockets up towards 92,000, then bam, gets slammed down to 87.5, only to recover just as quickly. It really shows you how a few big players can throw the price around in this market. It's a major risk you have to be aware of. So for all you traders out there, these are the lines in the sand. That weekend low around 87.5, that level absolutely has to hold to keep the bullish story alive. On the upside, a clean break above 94,000 could be the trigger. It could start its own little short squeeze and clear the runway for a run at that big, beautiful psychological target of 100,000. Okay, so let's put it all together. Let's connect all these dots and figure out what you really need to be watching for.
So in a nutshell, the Federal Reserve might be about to provide the fuel if they go over that $30 billion mark. The Russell 2000 could be the spark if it breaks out and squeezes all those shorts. And if all of that aligns, Bitcoin could be one of the biggest winners if it can clear its own key levels.
And that really leaves us with the big final question, doesn't it? Are we just setting the stage for another spectacular liquidity-fueled party, or are we just ignoring the risks, papering over the cracks, and kicking a much bigger can down the road? That's what we need to watch out for.